Hi, this is Eric with Low VA Rates. We are experts in the area of VA loans, and today we are going to show you why we are a leader in the arena of VA hybrid ARM loans. Now, the VA hybrid loan is one of the most misunderstood loans available to veterans today. And what I love about this loan is once it's understood, it becomes a massive tool or asset in the lives of many men and women that have VA loan benefits. So let's jump right into it. Today's training, as you can see from the slide, is understanding the VA hybrid ARM loan. Now, let's start first by defining what is a VA hybrid loan. Okay? First of all, it is a loan that brings the best of all the VA has to offer you. Keep in mind, civilians are not eligible. So these are special VA benefits that you get. Number two, the VA hybrid ARM loan brings you fixed rates, and these fixed rates are lower than 30-year or 15-year rates, and it also has a variable component. So let me rephrase that. There's a portion of the loan that's fixed. There's also a portion of the loan that's variable. That's what makes it a hybrid. If you think about the word hybrid, think of a hybrid vehicle. Maybe it runs on gasoline and electricity, or solar and electricity. Maybe it runs on natural gas and on solar power. So anytime you take two things and they produce something better, I like to refer to that as a hybrid. It'd be like saying 1 + 1 = 3, right? So the VA's hybrid, which is offered by Low VA Rates, is fixed for your next 60 mortgage payments. Okay, so that's a 5-year hybrid. Now, you can choose to go to a shorter fixed rate period, like a 3-year hybrid, which would be fixed for 36 months. And of course, that's also an option. So we offer both. Keep in mind on a VA hybrid loan that the Department of Veterans Affairs guarantees and approves the offering of this loan to military families. It actually became part of the Veterans Benefits Improvement Act, which made this loan law some years ago. And probably the final thing I would like to let you know about the VA hybrid loan, regardless of what you've heard, and we will get into this in more detail going forward, but it is a very safe and stable loan. I know you may not think that now, but please keep watching. So how does a VA hybrid loan work? Okay, first of all, it works exactly like a 30-year fixed rate does during that first 60 months or 36 months, depending on whether or not you want the 5-year hybrid or the 3-year hybrid. So everything you know about a 30-year fixed rate is exactly how this loan is going to work during the fixed rate portion of the loan. Once the loan starts to adjust, it is very similar to a 30-year fixed rate loan. However, there are some added benefits, and we'll get into that in some of the slides coming up. Now, because it's a hybrid, it does have some variable aspects or proponents to it. It can go both up and down after that first 60 months. Most people think, oh, well, the hybrid loan, the adjustable rate mortgage, it's only going to go up. As a matter of fact, for the last 5 or 6 years, anyone that's been on a adjustable rate mortgage with the VA has seen their interest rate and thus their payments decreasing. So keep that in mind. It can go both up and down. The VA has gone to great lengths to ensure the stability and safety of this loan, and they've put certain components in place to protect you. First of all, no matter what happens with interest rates, your interest rate on the hybrid loan can never go up more than 1% maximum in any given year, and that doesn't even happen until after you've come out of the fixed rate period. So there's a cap or a ceiling there that it can never go up more than 1% in any given year. Something else to keep in mind, it can never go up more than 1 time per year. So there's very little volatility. There's 1 time a year that it can adjust up or down, and then after that, it doesn't matter what happens. Nothing happens to it again until the next year. And not only is there an annual cap, but there is a lifetime cap or ceiling that says your interest rate can never increase by more than 5% from where you started, ever. Even if we hit Armageddon and interest rates skyrocket. There's hyperinflation like we had back in the 80s, and you hear all these horror stories of, well, when my parents bought their house, they had a 13 or 15% mortgage. Well, great. If we get back to a situation like that, you cannot find yourself with an interest rate that goes any higher than 5% from where you started. That comes back into that safe and secure aspect that I was talking about. So let's consider some other factors. First of all, it's very important to understand that the average U.S. homeowner is only in their mortgage for 3.7 to 4.2 years. So on average in this country, according to Fannie Mae and Freddie Mac, nobody stays in a mortgage for more than 5 years on average. It just doesn't happen. Now I hear people all the time say, no, you don't understand. I'm going to die in this house. This is my dream home. Notice I didn't say that you don't stay in your home for more than 3 to 4 years. I said you do not stay in your mortgage, and it's very important to understand the difference. People are consistently refinancing, whether they're trying to lower their payment, whether they're trying to add an addition onto their home or consolidate debt, pay off bills, get the kids to college. It's important to understand, and we go into more detail on this topic in other videos that we have available, but why are we so worried about a 30-year fixed rate when the banks all know, as well do we, that we're not going to be in the loan that long? How many people do you know that have been in a home, they've been in the same mortgage for the last 30 years? They literally made 360 mortgage payments and never refinanced. It just doesn't happen. Keep in mind also, the VA will allow you to streamline out of your hybrid loan anytime that you think it's a good move. Okay? So if you get into this hybrid loan and your 3 or 5 year period goes and you just don't feel comfortable being in the loan once your fixed rate period is coming to an end, then simply streamline refinance just like you're doing now back into another 3 or 5 year arm. Honestly, it's allowed and it's very smart to do many times. So you're never tied into this loan. Now, if you let your credit go kerplunk or you get foreclosed on or you get into a bankruptcy situation, keep in mind you still have to be eligible for the VA Streamline to be able to do it. But there's no limit on how often you do it as long as it's benefiting you. Probably something that I think most veterans get a lot of confidence or that their anxiety on the hybrid arm decreases when they realize that this loan is backed and guaranteed by the Department of Veterans Affairs. It was written into law as part of the Veterans Benefits Improvement Act. George Bush signed it into law right before his last term. Why would the VA back this loan? Why would they guarantee it and make it a loan that banks could offer if it wasn't a safe and secure loan? They just wouldn't. Because if you go belly up and you can't make your payments, the VA is on the hook for a portion of this mortgage. Keep that in mind when you're thinking about this loan. Okay? And probably something else that you really need to understand, these loans are nothing like the toxic or dangerous ARM loans that you've heard about over the last 5 to 6 years in the media. I don't care what news organization you follow or what websites or blogs you read, all this stuff about ARM loans having caused the housing collapse and the mortgage meltdown. First of all, that's not true. ARM loans actually did pretty good for a long time. It's the liar loans or the no-doc loans where people could make up their income. They didn't have to verify that they had a job, or they didn't have to verify that they really made $5,000 a month. People could get into a home as long as they had a pulse. That's what caused the housing collapse. Now, the ARMs that you hear about, all this negative stuff, you've never heard anything about a VA ARM being negative. VA ARMs performed very well. Some of the best performing loans during the housing collapse and mortgage meltdown. The loans you've heard of that have caused havoc and problems were interest-only loans where no matter what, every time you made your payment, you weren't paying your balance down. Or option ARMs or pick-a-pay loans, which were very big in California, Arizona, Florida, where you could make a negative amortizing payment, which meant every month you made a payment, you didn't even cover the interest that you owed the bank, and therefore your balance went up every single month. Obviously, that those sorts of loans are going to cause problems, and there's a reason why the VA does not offer, endorse, or guarantee loans like that. So please keep in mind there's a big difference here on what the VA is offering and what Wall Street was peddling for years. Okay. Now, let me show you the money. Most people say, okay, I'm getting a little bit better understanding of this, but show me how this is supposed to help me. First of all, let's compare two loans. Right now, the date that we're recording this video, a 3.75 30-year fixed rate is doable. Most people are getting 4.25 or higher, but you could get a 3.75 30-year fixed rate today. And let's just assume you had a $250,000 loan. At 3.75% for 30 years, you would have an $1,157 a month payment every month. That's just principal and interest. We're not taking into consideration taxes or insurance here. Where if you would do the same $250,000 loan at 2.25%, your mortgage payment would be $955 a month. So you're saving $202 every single month. That's almost $2,500 a year, and it could potentially save you almost $20,000. Now, we have other slides, and you can talk to your loan officer about how this works. Because you may say, well, how are you getting $19,000? Essentially, we teach our veteran homeowners that if they'd like to pay their home down quicker, they can do that through an ARM loan much faster than they can a 30-year fixed. And what we do is we tell you to take this $202 a month that you're saving and keep sending it in every single month and attack that principal balance, and it allows you to get your it allows you to get your mortgage balance paid down extremely fast. We have way more details on that. If you give us a call or talk to your loan officer, they can tell you how to utilize the hybrid ARM loan to accelerate the payoff on your loan. Okay, so let's just think about it. What are you going to do with an extra $2,500 a year? Not to mention when you refinance, if you have not been told this already, you are possibly going to get, and in most times going to get, an escrow refund back from your current lender, and you will get to postpone your next two mortgage payments and wrap those into this new loan. So what are you going to do with all this money? For some of you, it could be $5,000, $6,000, $7,000 day one. Well, we have people that pay off credit cards. Think if you took this extra $202 a month and started paying down your Visa or your MasterCard. Those credit cards have interest rates upwards of 15, 16, 17%. You can get them paid off very quickly and save yourself thousands and thousands of dollars a year. Perhaps you want to take a vacation. Maybe you've got some home improvements you want to do. You want to add on to your garage or put in a swimming pool, put on solar panels. Some people just want to save for a rainy day. They just want to put the money in the bank and save it. Okay? Regardless of what your decision is, we would love to help you out. Quickly just sharing some testimonials. We have a lot of clients just like you all over the country who are not only saving money by refinancing with low VA rates, but more importantly, they're becoming educated and learning how to use a loan that they've just misunderstood or perhaps never even knew existed. And we make it very simple and very easy for them to do. I want to thank you today for choosing low VA rates. We are definitely an industry leader on VA hybrid loans. You can go to our website at lowvarates.com at any time for updated and useful information. Please, if this is your first time watching this video today, call us at 866-869-8272. That's 866-869-8272. Or if it's easier to remember, 866-LOW-VA-RATES. Look forward to helping you, and we invite you to watch as many of our other training and tutorial videos on our YouTube station. Thanks for watching. Have a great day.